What is going on, guys? Welcome back. It's Institutional here, and we're back with another series, with a series that we covered before, which is going to be building data. So, this series consists of just understanding what has happened for the day, a little bit about what happens with my mind, and how we understand the market in terms of an SMC perspective. So, let's start off with what actually happened today with the market and what we're looking at in terms of trades. So, if you look over here, the first thing you want to ask yourself, well, where are we in terms of bias? Obviously you can see that we are bearish, right? We've been dropping down bearish since the 17th. We're now on the 23rd and we're still dropping. Any correction that we're getting above is just a retracement for price to continue going lower. So it's easy or pretty ideal to understand this, right? Try not to catch the bottoms. If you're catching the bottoms, you're just going to be short-term trades, understanding that majority of the time, you're just going to be corrections for price to continue dropping. And how you understand these things is just looking in terms of what is the structure doing? What do we have with COT data? What do we have with seasonal tendencies? All these things combined together give you a better perspective of your bias or the trend. But in a simpler term, you could also use as easy as just understanding where are we in terms of our dealing range and what is our dealing range compounded of? And these, or how do I understand what a dealing range is for that specific day? So a dealing range consists of what Asia happened and what happened through London. Both these things compounded will give you a dealing range for that specific day, because we have to understand that not every day will price go up 100 pips or 50 pips. Majority of the time, price will go anywhere from 20 to 30 pips. But if you understand that trade, if you understand that trend, and you're able to capitalize those 25 pips and just have a nice little 5 pip stop loss, and you do that on a consistent basis, you're getting a nice R with it. So heading forward here, we want to ask ourselves, all right, what is our dealing range for this day? And you can see how here we have the highs, there's London highs right here. And here we have our London lows. So here is our dealing range for this day in specific. And again, the Asian range is really small, but again, it's still compounded of that, but it's both sessions. So we have our London highs and we have London lows. And we now want to be asking ourselves, all right, where could we have caught a trade, or where did we catch a trade? I caught a trade here, I caught a loss and I caught a win, and I'm going to go with both of them. So I showed you guys specifically what I saw and what I was expecting with the market. And understanding as well, the last video that I showed you guys on bearish fair value gaps, how you can use them as well buys and sells. It's going to be very important for this video. You're going to start seeing it hands-on here, how it actually works and how you guys can have a better perspective of what they mean. So we're going to mark off here now, your 8:30 open. So you can just go back to amplitude right here. And let's put the 8:30 right there. And we trade all the way from 8:30 all the way to 11, right? That's our kill zone from this New York trend. This is the trend that we're trying to capitalize from, right? And then we trade all the way again from 13, which is going to be 1 p.m. all the way till 16, which is going to be 4 p.m., right? This is our kill zone. This is our morning kill zone. So our New York session, AM kill zone right there. This is our AM kill zone. And this right here is our PM kill zone. And we have to know that anywhere above that or anywhere beyond that, we're not trading. It's a no trading zone. And in the middle, right, this is lunch hour. This is when people are eating their lunch, people are just relaxing for the day. There's going to be no volume, so it's better to just not capitalize from it. Or if you're in a trade, make sure you're at break even and just understand that there's going to be no volume majority of the time, and price will, what I try to do is follow the trend, right? So I try to go for some liquidity and then continue on with downside bias. So what do we do here? You can see how we went up higher, we got some liquidity above. Now we continued kind of being corrective, but overall did drop a decent amount here. So now getting back to the lesson, right? And getting back to building data. When you are building your data, you want to make sure that, again, you draw like Picasso, so you have a better perspective of what price is doing, and you can start engraving these type of price action moves to your brain. So when the next day comes, you have an idea of what price should be doing, or you have an idea of what to be looking for. So what are we looking for on an everyday basis? If we're bearish, we want to be looking for price to come back up to a premium. We want to sell it all the way down to a discount. So what does that mean? Well, here we have our fibs. We can put that above here. We understand that anywhere above it, anywhere above the 50% of our fibs, we are at a what? We are at a premium, right? So we want to be looking to sell here, since we understand that overall with S&P, we are bearish. That's going to be our most probable trade. Bearish price action is going to be our most probable trade, since we are trending downwards. But if you want to be looking to buy, it's going to be short term, but we have to understand that there's still probabilities for us to capitalize from a discount, or when we're looking to close out of a trade, we want to be looking to close at a discount. So what can you guys see in this M15 here that potentially could give us a closure at a discount right here? If you guys take a look right here, clear as day, we have a nice and decent fair value gap that can give us context to where we want to stop trading for the day. And if it hits this level, we can get out of the trade for this day's hold. When I was looking at price, I saw this and I was understanding that the price comes back down to this level. I want to get out of this trade and just call it a day for that specific time being, or make sure that I understand where price could potentially go because it's now hitting a discount and it's not going to be high probable. So now heading forward towards the open, we're going to cover the trades that I saw. So I was looking at M15 at 930, right? At 930 is going to be right here. Do you guys really see anything here? You don't. What I see is that we have a little bit of SMT. And where is the SMT? If you guys take a look over here at US 500, here we have a little bit of equal highs, right? You can see how this is SMT right there. And if you guys now take a look at US 100, you can see how here we grabbed the highs. So here we actually had a purge of liquidity, while US 500 didn't quite have that purge. So whenever we have things like that that show me that US 100 is grabbing the liquidity above, it's going to be showing me price action. If you guys take a look right here, you gotta take a look here. So that last lower high point is a bigger, higher high than what US 100 is like, right? So you can see how this one is a little bit equal. And for US 100 here, we actually go up a little bit higher. So this is giving me context that, what does this mean? This means that US 100 is grabbing liquidity and that US 500 is failing to continue going higher. So once I saw this at that 930 open, right, I was looking at any type of value gap that can give me context for price if you're looking to go shorter. And what can you guys see right here? Value gap, right? But once price taps into this, I'm looking at the M1. So when I looked at the M1, the specific time frame right here, what do you guys see that happens here? Price, again, that gives you this equal highs, but it's SMT with US 100. It taps into the fair value gap, higher low point, higher high, and it breaks down lower. So what did we break here? Again, go back to that last video. We broke this last fair value gap that's going to be used now as a selling pool because this buying pool got grabbed. So anybody that's looking to buy here, any SMC trader, is going to be closing their orders and they're going to try to be getting on sells to continue with the trend. Now, do we have context to go for this sell? We do. What is one? We have SMT. What is two? We also have the way that price is going up correctively, and we also have that level at a discount we want to capitalize from. So you go ahead and mark these things off. And what I was looking for was price to come back down to tap into this rally gap right here. You guys can spot it right here. But I wanted it to tap into the 50%, which we didn't. So it did not trigger me in. I was looking for price to come back above right here, 50%. Stops above this rally gap. I mean, candlestick that made that rally gap. And then I'm looking for the lows right here for a nice little 2.781. Guess what? Triggered me in. But now head forward, right? What does price do? So price now has given you a purge. What does that mean? It means that he has grabbed some of the liquidity that we have left behind. So now you want to start keeping your eyes on. Does price want to continue going bearish, or does price want to continue going bullish? You don't want to use this now as a sell, because you have to understand that when you're using this as a sell, it's just to grab the liquidity that's resting below. Once you grab that, this is just used compounded now as a POI. So you need to wait for structure to come back up here and then now give you a break of structure. What does price do next? It now breaks this rally gap, and coincidentally, again, what does it do? We have a bearish rally gap that gets broken. So there's going to be a buying pool right here. And this could have been a trade that you could have gotten. For me, I was being greedy. And what I wanted for price to do was come back down a little bit lower here at this discount. And from here, I was going to target the longs all the way back up towards the highs. Because if you guys take a look over here, what are we traders going to be doing here? What do we have right here? Just go ahead and put X79, put it right here, and do that. What can you guys see clear as day? What is this? This is a trend line, right? So any retail trader looking to capitalize from this, they're going to be expecting price to continue dropping. So they got induced already with the sell right here. We understood that the sell was going to work out. Why was it going to work out? Because we had SMT, we have a rally gap being mitigated, and we have equal lows that we still have to grab. So yes, we capitalize from this, but once price grabs the liquidity, we want to ask ourselves, well, where's the next level of liquidity? Because every day, what are we doing? We're looking at our feeder range, and we're looking for the pockets of liquidity that price could potentially go back up towards. If it grabs this one, we're going for this one. If it grabs this one, we're going for this one. And if it grabs both, then we're just following the trend to continue going on whatever trend it's heading towards. So again, I know I speak fast, but just trust me, building data. Make sure you're drawing like Picasso every day so you understand what's happening through the day and you can build that price action on an everyday basis so you can get a better perspective of what's to come through the days ahead. So now, heading forward, right? I was looking for price to come back down here, didn't trigger me in, and price goes up higher. So what did we leave behind? Again, bearish rally gap, then now turns bullish. So we make this a buying pool, taps into that, and it continues going higher. Take a look at what happens here. What I was looking at here, this was my loss for the day. I was looking at price to come back up here, come back down here. You can see here we have a rally gap right here. So we have higher low points that lets us higher high. Now this comes now to my trading plan, right? What do we have here? We have price dropping down pretty impulsively, but as soon as it drops down impulsively, it goes back up again impulsively. So here it's giving you a break of structure and a first mitigation. And what do we have right next to it? We have now a new rally gap. So this could be now your trade. And this was my trade when I was looking for price to continue going higher. And guess what? It triggered me in, and as just as it triggered me in, it stops me out really quick. But take a look at what price does after that. Take a look at right here. This bullish rally gap again gets tapped into that bearish rally gap. So you didn't do anything wrong here, because when you see things like this means that SMC traders like you were looking to take trades from that, but they weren't in that correct trend. So what they'll do is they'll come back up so they can mitigate their orders and then continue going on with the correct trend. So let's head forward and actually see what happened here. If we take a look and delete all of this, and now we go back to the M3, this is where I saw this trade right here. What did price actually do? It's understanding that anytime that price goes above, we are just grabbing liquidity. We have to understand that overall we are bears. So we grab the liquidity above, we grab the liquidity under, and if we drop down here, we fail to make a swing high, and we also tap into this rally gap. So this is going to be your first mitigation. Your first mitigation that leaves now equal lows right here. So these equal lows could have perspective for you to continue shorting. And the trade that we took now that got me back the loss was right here. Rally gap right here. Had my entry at 50% right here. Had my stops above it right there. And targeting the lows down here for an exit of 3 to 1. You can see how price comes above, triggers us in, and draws back down to our sell side liquidity that we have pending for the day, right? And that was it. That's all you need to do. Even if you take a small loss, it's just understanding where you're at in the trend. And even if you take a small loss, just understand, try to fix yourself, right? What did you do wrong? What could you do better? Follow your trading plan. If you followed it, there's nothing bad with it, right? Sometimes you're going to take small losses, but again, if you don't see where you took the loss, then go back after the session ends and start drawing and ask yourself, right, what has actually happened and what could I have done better in this day? So now heading forward, this is when I stop trading, but let's take a look at what actually happened now through that PM kill zone. So a lesson here in PM kill zone. What's going to happen in PM kill zone majority of the time is price is going to shoot above to grab some liquidity. And ask yourself, well, why is that? Why is price going to grab liquidity? It's going to grab liquidity, but it's going to continue going on with the trend that we had in the morning. So what did we have in the morning? We had an inducement for buyers, price to go up higher, and then we had a sell-off. So price for this day is bearish. Where are people going to start placing their stop losses when they see price dropping down here like this that they were able to capitalize from? They're going to have stop losses. They're going to have trading stops. They're going to have stops here. They're going to have stops here. They're going to have stops here. And you can see how all these levels get hit. After the levels get hit, or after your levels of liquidity get hit, you want to start looking for more confirmation to now continue on with that bearish trend. So looking at this PM kill zone, what can you see here? You have a high low point that leads to a higher high that has grabbed what? It has grabbed liquidity, right? After we drop down, what do we leave behind right here? Pretty easy to spot for rally gap. Pretty easy to spot. You don't really need more. You can spot it right there. That leads to its lower low. So you have to understand that now here, you have a level of liquidity that you could be aiming for. What would you do here? Put your shorts at the 50% right there, put your stops above it, and you can target the lows right here for an exit of 4.45 to 1. And this was your session trades for the day. Even if you miss this mitigation, you can see how right here, we also have a rally gap. So you tap into that as well. The rally gap taps into you in and continues dropping. So it's now, again, just building that data, understanding where you're at in terms of both morning and PM session, and just getting a better idea of how the market actually moves, right? From premium to discount, and then marking off your levels that make the most sense. So I hope you guys were able to capitalize from this. I hope you guys know a little bit about that built-in data trades that I have and how I'm able to see the market and how you can capitalize from it. Again, it's not about catching those huge 10 Rs, 8 Rs, 9 Rs. If you're able to catch decent 3 Rs, 4 Rs, 5 Rs, even 2.5 Rs above, and you can catch these on a consistent basis, you will become profitable. So I hope you guys learned a bit from this one. I'm out of breath, but you guys know how it goes. Don't overtrade, don't over leverage. Safe trading. Peace.